Welcome back to another episode of Property Auction Hunters. Today you've got myself and PR, and we have a very, very special guest for you. We've been getting loads and loads of messages recently about all the properties that have been going into Allsop auction from Home REIT stock, and everyone wants to understand what's been going on with these properties, how they're being sold, how can you make money from them. And today we've been messaged by a guy called Jamie. So welcome, Jamie.
Thank you.
Jamie is one of the biggest buyers of Home REIT stock at Allsop auctions, and he messaged us telling us, I want to tell you all about my story, how I've bought these properties, how I've made money. So today we are really, really excited to have Jamie on board. Jamie, just tell us a bit about your story. So obviously we were talking a bit off camera previously, but just take us back to when you first did your due diligence on these properties and then sort of take us through that journey.
Yeah, so I was trying to get back into property, really, really struggling, high interest rates, couldn't figure out how to go about it. And I looked every single week for different lots across different auction houses. And I think it was this random Tuesday, there was 14 houses in Derby that all got added. They were all occupied unknown. They were all no internal pictures, no information, bizarre legal packs. They all had a legal pack with a charity for 25 years. I thought it's great. Started delving into it. Charity had gone bust. Charity was in liquidation. So loads and loads of question marks. So we thought, first thing we're going to do is we're going to go out, we're going to have a look at these houses, and we're going to try and figure out what's going on. And that was kind of the first moment that we said, hey, we're going to have a look at these houses and see where we end up.
And what was that? Was that November 2023?
So that was the back end of October.
October 2023.
Okay. It was funny. I had my eldest daughter with me for the school holidays, and we said, look, we're going to take you out on a fun little day, and you're going to learn all about property. And yeah, she learned some pretty interesting things on that first day.
Okay, so October 2023 was the first time you've obviously understood about these properties or seen them for the first time. When did you buy your first one? And if so, how many did you buy within that month?
Yeah, so we bought 6 houses in that first auction. A number of them were occupied unknown. We didn't know who was inside them. We didn't know anything about them. We then found out that these were all perfectly ready to let houses, good to go. There was a couple of them that were less so. It's quite widely publicised that a number of the Home REIT stock had troubles with cannabis grows. And one of the ones in particular that we bought was pretty much a recently gutted cannabis grow, which was great.
So that provided the opportunity, I guess, for you to kind of look at things from a point of view of the ones that were cannabis grows, that gave you a bit of an edge over the people that were bidding on it? Yeah,
so it's kind of weird that you start going out to. We did 14 viewings on that first set of auctions in October, and every single house that we saw in the morning was all brand new. They were all recently ready to let. Like I said, everything was great. But then we got into the afternoon, and all of a sudden, we started to say, "Hey, we can't go into this house. Why can't we go into this house? Oh, this it's not. You can't go in it. Something's wrong." And then the next week, it got removed from the auction. So then we started to figure out something was going wrong. We managed to get into another property later in the day where it was a live grow, and that photo ended up going into investment week later in February kind of March time, and they started to kind of document these weed grows and everything else and what was going on.
Go for it.
So when you actually saw those first 12 houses in the auction, obviously they were what they were priced at? What was the guide price?
I think the guide was 50k. So all of the guides 50k. We went around the houses. We were measuring the rooms, making sure that everything was okay. A lot of the rooms were 5.
So and you could access the houses? They were like normal viewings, or was it?
There were normal viewings.
Okay.
It was the first day of the viewings. Everything was fine. There was a couple of houses they couldn't get into because the lock on the key safe had changed and nobody could figure out what was going on. But for me, it was just about going around and assessing these properties in the first day.
And what did you think those properties were worth? Like 50k guide price, or 200?
We knew they were worth more than what they were. However, there was a problem. So, for example, out of the first day where we did 12 viewings, there were a number of properties that had rooms that were too small. So there were a number of rooms that were literally 5.5 square meters. There were a number of rooms that had slopes that clearly couldn't be a room. So, we started ruling out these properties and saying, hey, these ones don't work, these ones don't work. We went home and we looked at the list that we got, and there was 4 houses that we could buy that we were kind of happy with, that we were like, hey, this is good, off we go. Those 4 houses, they were in places like Sinfin, they were in places like Spondon, they were in places like Chaddeston, all of which are in Derbyshire. I sat down with my business partner and said, hey, what do you want to do here? Where do you want to get into the HMO space? You know, we weren't property people. We had no idea what we wanted to do. We didn't know whether we wanted to do HMOs. We didn't know whether we wanted to do service accommodation. We just knew that there was a story here. There was a weird story around these charities. There was a weird set of circumstances that had led them to being in this auction. You know, and we knew that, hey, like everybody's trying to make a bit of money. Everyone's trying to find a way to make an extra couple of £1,000s here. It's a tough time at the minute out there. And we said, okay, we're going to buy these houses. We're going to figure out what we're going to go and do. The day after, I'm in a coffee shop that I've got a coffee shop in Nottingham, and I had a guy fitting a kitchen, and he just got off of a property course. He paid £10,000 for the property course. And he said to me, he said, have you ever leased a house, Jamie? I said, don't know what you're on about. He said, leasing houses to charities is the next thing. I was like, it's so funny that we talk about this because this Home REIT thing, leased it to a charity, but I was like, look, these charities, they're not real. They're going into liquidation. They're all weird, dodgy characters. He said, no. He said, YMCA. I said, like the song. I am that naive, right? I only found out the song was about the YMCA charity, despite how obvious it may appear.
Yeah.
I just thought it was a song. So now the song of the charity, and he said, you know, have you ever thought about leasing to YMCA? I was like, no, never thought about it.
And they're quite big in the Midlands as well, to be honest.
So they're all so the YMCA sit in a very unique place. They're all their own separate companies, and they're all regionalised. They all sit in you know, a Nottingham YMCA is a Nottingham YMCA, a Derby's a Derby, and
we even got it in Lincoln as well.
Yeah. So, and it's a really nice brand. It's a very reputable charity. So I rang a lady in Derby and I said, hey, do you need houses? What do you need? Talk to me about your specific need for houses. I sounded so stupid. I rang and just went, do you need houses?
Yeah.
To my surprise, they went, yes. And then it then got into the detail that, hey, we need HMO houses. And because they use it for their temporary accommodation space, they need it at 5.5 square meters, which is quite rare. A lot of places need it at 6.5 and everything else. Well, then the Home REIT stuff became weirdly intertwangled in that, because a number of the rooms were only 5.5 or 5.5 to 6.5 square meters. I sent all these postcodes over and I said, hey, yeah, these 14 postcodes, which ones do you want? She said, we'll take these 4. I almost went to that first auction with Allsop's with a shopping list and told to buy.
Yeah.
I had no head of terms. I had no understanding of whether any of this was going to fall through. My partner was like, look, you're absolutely mad. What are you doing? I was like, it's the YMCA. They're not going to let us down. You know, everybody knows them. And we bought those houses in auction, and pretty much between the point of buying them to the point of completion, I was ringing the YMCA every week, like, you definitely want these houses. Everything's great. They sent over a head of terms later into November, and they said, we'll pay you £90 per room across these 4 properties. You know, everything was great. We bought those houses for 100k. So we bought them for 100k. We're getting £1,600 a month.
Yeah.
You know, 18% yield.
Crazy.
And I went out with my friends a couple of days later and I said, guys, we all have to do this. We all have to get all the money that we've got, and we just have to keep buying. And they're like, yeah, we're not going to do that. We're you know, this is a bit weird. It's a bit too good to be true. And I was like, I get it. Everything that everyone ever says is, if something's too good to be true,
it is.
It normally is. So I ignored everybody, and I managed to partner up with a guy who was an ex-mortgage advisor who, you know, did high street mortgages, and now we were buying, you know, we were committing to buy a load of stuff out of auctions. We were working with lenders that he'd never worked with before. You know, we were using bridging finance just to get them out of the auctions. We were mortgaging out the auctions. We were doing whatever we could. And yet he thought his experience of a mortgage advisor would help. But in the end, it was a completely different world to anything that he'd worked with. You know, these houses were, no valuations could be given, no access.
Terms unknown.
You name it. Everything was a deck of cards of everything wrong. And I started to understand that the psychology of a buyer in an average auction isn't the person that's buying these stock.
Yeah.
How many people out there are going to buy a house if there's no viewings? Not many. How many people are going to buy a house? Oh, by the way, we have no viewings. We don't know who's inside. And yeah, there's a bit more of a cloud.
Yeah.
Like no one's buying them.
I don't know if you realise, so we, in the sort of trading world, let's just call it, there's a phrase that we call auction arbitrage, which is basically buying something that's mismarketed, misinformation, trying to get an edge on something, and then putting it into a totally different auction, different date, and then basically making a margin on that trade, right? So that's auction arbitrage. So you buy from one auction, sell another. Give you an example. We bought a property that was repossessed. They had to price it pretty high in terms of where they want the reserve. It was all boarded up with metal shutters, no internal viewings, no floor plan, no nothing. We picked it up. It went for sale 3 times, unsold. Picked it up post-auction, put it into another auction exactly the next month with viewings, with floor plans, no metal shutters, and arbitraged 12 grand on that deal. It was a small deal. We bought it for 43 or whatever. But that's what you're doing. It just so happens that you're not necessarily selling them back into auction, but you're getting that uplift in value. So what you're doing is you're finding an arbitrage opportunity, which happens in everything, right? Cars, watches, obviously in this case it's property. You've probably not realised that, but that's what you're doing. But fast forward to today, right? We're, as the date of recording this, we're August 2024. How many properties or units have you bought since then, since that sort of November 2023 period? And what kind of equity uplift do you think you've made in terms of profit if you had to sell everything today?
Hi, I'm Michael Allsop. I'm the commercial director at Roma Finance. And one of the things we know are key when it comes to buying properties at auction is the ability to speak to the decision maker. At Roma Finance, you have access to your dedicated underwriter who will take your case from application all the way through to completion.
So pretty much from November through to April, we'd got about 30 properties. Okay. Predominantly, we bought everything in December, January. Yeah. And then we just started to buy. Amazing times to buy. Yeah.
December's are always a down month to buy, so it's a great time.
Funnily you say that. December, we did the first auction in November, and we were so confident. Yeah. We were like, look, psychology. Everyone's going to be buying, kids' presents, Christmas. No one is buying anything in December. Memory, I think there was 2 auctions with Allsops in December.
I believe so, yeah.
We only bought 1 house
in
December because everything went for significantly more money than it did in November. I feel like the market started to realise what was going on. I feel like there was a load of stuff being sold in September, August. It was gradually getting higher and higher and higher. And I liken it to the first bite of the cherry. Yeah. And I know I've kind of not answered your question. I will come back to it. There was a lot of people buying in September speculatively, opening a door and then going, wow, this isn't what I thought I was buying. This is fantastic. I'm going to go back for the second bite of the cherry. And then whispers started to spread. And I've heard this from other people that have said, people kept coming back and buying more. They might have bought 1 or 2 and then they kind of bought 3, 4, 5. By December, I feel like the market had erupted for certainly the home REIT stuff. Yeah. I certainly feel like the chunks of properties that were being sold by a home REIT were largely dictated to via the charities. Each charity treated each property differently. This is something that we've come to know. So when you look at November's trench of properties, they were either a cannabis grow or they were brand new. They were recently renovated. We start going into December. December's were not the opportunities like, the perfectly ready to let, ready to go to social housing or ready to get rented out. They just weren't. In December, they were a little bit more scatty, run down. There was a lot more dodging kind of poison properties that were advertised. There was a property that was advertised. I can't remember where it was. And I knew it to be empty. I knew it to be completely wrecked. And it was advertised with 40k rent. The guy stands on the auction and he says, what a fantastic property here. Great yield, great rent. And I'm sat there screaming at them like, it's not real. It's not real. It's wrong. And people then went and bought that house. The bite of the cherry the first time, it was great. Okay, not a problem. But this one in December, they started to get burned. I know for a fact that people started to get overconfident with buying the home REIT stock.
Yeah, they thought it was too easy.
Too easy.
Yeah. There was one massive block in the market that went for like 4 times the guide price, and I'm pretty sure no one's making money on that.
Yes. But there was stuff in Bromsgrove that sold in November. There was a block of 20 flats, and the guy hammered it for 440, and then I saw it on. There's a website called OPA, Open Property.
Oh yeah.
I've never bought anything from it, but they'd advertised the same property for £1 million, and they actually provided all the ASTs. Yeah. So what we know about Home REIT is people did really, really well in the early stages. Between December, January, February, it was about avoiding things. You know, it was about doing all your research possible. To get to where we are today, where we stopped buying a lot in April, we just picked up 1s and 2s. You know, we've done incredibly well. You know, we bought a house in December in Scarborough. You know, had 1,000 plants in it. You know, it had 13 rooms, had 1,000 plants. We bought it for 207. We managed to find a guy on the ground in Scarborough that paid us 300k a week later. You know,
With the plants?
No, he wasn't a very keen gardener. So, but thankfully we removed the plants. I think once we removed the plants, it might not have made any profit.
I think with like all of those home REIT properties, there's less and less risks because people know how to approach them. Yeah. And also all you need is 2 people who actually know the story inside out and they fight for this.
But the whole point is, you know, you're taking that risk away from them. So the whole point is, Jamie's taking the risk because maybe he's done all his due diligence, he's done loads of extra things. You're taking the risk away, and then you're basically getting something pretty much on a plate for them. Yes, they're paying 300 grand, but that makes no difference to you because you could have bought it for 10 grand for all you care. From your point of view, you've taken all the risk out by obviously offering it to them. But just going back to my question, and then I want to come back to this point. So how many units would you say in total you bought from Home REIT, roughly?
So from Home REIT, 29.
29.
And this year from Allsop's auctions, I think it's 35 or 36.
35 in total, 36. Yeah. And what would you say the equity value of your uplift is, just roughly on that?
So of the 36, we sold 5.
Yeah.
So we picked them up and we offloaded them. Those 5 we flipped for a combined profit of about 308k.
Okay.
And then away from that, we think that the equity uplift is about 1.2, 1.3.
On top of that, so really about 1.5 in total.
Yeah, about 1.5.
Those 5 properties, just to zoom into them, did you exit them through auction? Did you exit them through direct buyers or through agents? And if so, why did you exit those 5 specifically?
So to talk about those 5, the first one we flipped was an 8-bedroom house in Scarborough. And we became convinced we were going to have the best holiday let in Scarborough. We'd heard about guys in Scarborough, you know, having... holiday lets are apparently a really, really big thing. Mm-hmm. So I started to read up about the holiday lets. And then I got told by this guy who's an estate agent in Scarborough for some other stuff that we've got. He said, the bigger the property, the better it is.
Yeah.
So if you've got an 8-bed property, you stick a jacuzzi in, you stick a pool table, you're making 150k a year. I said, no way. He said, listen, there's 2 or 3 guys that have got these big houses. They're making a mint. He said, if you could get this property that you've bought from auction for 207 and get it ready, off you go. So we sat down and we thought about it, and we asked ourselves whether we wanted to get into the Airbnb business and think about it. And the long answer short was we decided against it. And at the point we decided against it, we ended up meeting an electrician whose friend was in the market for a large HMO. And we met and we came to an agreement, and he said, look, I'll give you 300k. And it just made sense to flip something and then say, hey, I can't believe I made 93k. And you sit there and you pinch yourself, like, I've just made 93k. You know, I've worked for a whole year and not made 93k. I've bought a house that I didn't really want, but I just didn't want to not buy anything in an auction, and it was a whim, and I've just sold it and I made 93k. And I kept telling everybody, I was like, I've just made 93k. And that's when we said, okay, anything that we can sell, we're going to sell.
Yeah.
So in and amongst buying things and holding them and renting them, it became about understanding which are the properties in the auction that are overlooked. In every auction, and I'm sure you guys do it, and I think we spoke about it earlier and you talked about it, there's something that's overlooked. There's something that just has too much complexity to it, or too many unknowns, or too big, too chunky, you can't get rid of it. We then ended up getting in to a conversation with Allsop about some flats that were being sold, developer had gone bust, planning hadn't been discharged, and it had gone through 2 auctions and not sold. I believe that it hadn't sold because it was selling them against Home REIT assets that were largely being favoured in relationship to these flats. And we ended up buying...
Because Home REIT stock was priced really well. This one probably wasn't priced as well because it was maybe a receiver or whatever selling it, so they have to get back a certain amount of money, right?
So I'm sure people know on the channel and everything else, Home REIT has houses across the country. But there were times Home REIT had stock in London being sold. There was lots in Kentish Town. There was lots in other pockets of London, and I just felt that somebody that was picking stuff up to flip just had too many options.
Yeah.
So we ended up doing a deal with these 2 flats, and we bought a 2-bed and a 1-bed flat on a street in London, Polytechnic Road or Polytechnic Street in Woolwich. We paid 240 and 290, and we sold them. We had them on the market for a week and a half, and they went for 400 and 300,000. So overnight, we'd then almost hit $250,000 nearly in 3 transactions, and we're only in February. And I'm thinking to myself, this is crazy. Like, we're gonna.
Hence why I had the holiday in April.
Yeah, so we started buying. We started going on holiday, and that was it. And then we bought a house. The next house that we sold was another bizarre circumstance. There was a house in Swaddling Coat. It was said rent reserved £8,000. The yield was 7 or 8, whatever it was, %. But I knew the house to be empty, and it was a house that you wouldn't rent. It was a house that you'd live in. It was a house that would go to a first-time buyer. But we knew the house was empty. I was told the house was empty. It then got removed from the auction, and I was really upset. In January, February time, it got removed, and it came back into the auction in April, still with a rent of X amount of thousand, despite the fact that we knew it was empty in February. So we drove over, and we ended up buying that house in April's auction. We paid 116. It was on the market for 2 days, 175 gone. So the only things that we sold were the things that we knew that we could go in and we knew we could get out of as quickly as we wanted. We didn't want to be holding any stock.
So, and what would you say, are there still opportunities with the Home REIT stock, given that everyone knows what's going on, the leases are being dissolved, the kind of, it is what it is. People know there's money to be made on those properties. Is there still money to be made there?
There is money to be made. However, the opportunities that have been and gone were the glory. They were the years that certainly you and I might sit and talk about it and say, hey, you remember when this went, and I can't believe this happened. The problem is Home REIT kind of wised up. They didn't do many things right, but I think what they did do right was around April time, they announced they were going to try and control the rent coming into the property, and they actually engaged with a local estate agent or a national estate agent, shall we say, to try and piece together the jigsaw. They were told a brief, figure out who's in these properties so that we can have that information. Probably January, February, March, November, December, things were sold. We don't know who's in these properties. Whereas now, when they're selling these properties, they're sold with a little bit more confidence that the rent yield is accurate. The rent yield does reflect, the truth.
Yeah.
They might not provide arrears schedules or anything like that, but by and large, the properties are a little bit more easier to buy with confidence.
Yeah.
In terms of
they removed all the uncertainty, which is what's obviously creating the suppressed value, I guess, really for them, which I think is clever. But at the end of the day, we bought a lot of stuff. So there's a similar company, not exactly the same, but there's a company that similar kind of situation where they bought about 2,000 houses over the last couple of years, went mad all over the country. And a lot of the time they had no clue what was going on inside them. They were paying 60 grand for a refurb that never got done.
Yeah.
They thought they were tenanted and some weren't tenanted. And the same thing, they had to start doing, they had when the whole Liz Truss situation kicked off and interest rates went up, they didn't expect it. They were basing the whole model on the lower interest rates. They ended up basically getting a lot of sort of larger loans called in. They had to end up doing fire sales and auctions. So all the large auctions across the country, they engaged them. And we picked up 30, 40 properties from them. We did some of the best deals we've ever done. They then caught on to that fact, and they started to slowly start to increase the price in terms of what they want, starting to understand and what's going on inside these properties. And then that kind of opportunity went after a while. You can still pick one or two up here and there, but the reality is this is what happens with these large institutions. They have to sell because they're forced to sell, not because they want to. So they have to do the fire sales to start off with. And then slowly, those deals start to really fade away after a while, I think. But in Home REIT's situation, you mentioned that every single month there was a theme with the kind of stock that they were bringing to the market. So again, today we're in August. They've got an auction in September. What do you think is going to be the theme for September, generally speaking? Do you think it's going to be the rundown houses where people need to be careful? Do you think it might be more of the newer stock? Do you think it might be the more grow houses?
Or the prime stock that was kept?
So I would say in the last 3 months, I'm continually surprised how many houses they had in Durham. Like, I think we could go for 5 years and they'd still be they'd still be selling these houses in Durham. It's ridiculous. But if we were going to talk about the opportunity that sits in September or certainly August, it really is a case that they're selling these large blocks. How often on the open market, do you see a block of 6, 10, 12, 20, 25, whatever it is? How often do you get those opportunities to buy something and get it at a discount? And I think that the theme at the minute is Home REIT, as we go deeper and deeper into their deadline. To me, their deadline is the end of the year. They've been told they've got to repay the balance to the creditors, to the bank, and whoever else. So working it back from that figure, I would say they're going to want at least 2.5 months prior to that point to get everything gone. We know that today they announced they released 4% of their charity, or a charity released 4% of their portfolio, which represented 68 houses. So if you then work that figure back, you know that they're roughly holding about 1,500 properties. So they've got 1,500 houses to sell. They've got a deadline at the end of the year. Yeah. There's rumours circulating every single day that they're going to package it out to one buyer.
Yeah, that's what we've heard as well.
But think about it logically. Which buyer is in a position to buy 1,500 houses of information that is still being gathered?
Blackstone, maybe.
Potentially.
They've just offloaded 3,300 houses.
But again, you know, how are they going to value that?
Yeah, it's a fair... I mean, look, they're going to have to take a discount on it. That's the reality. I think my point that I'm trying to come onto, really, from an overall point of view, is that they're not going to get rid of 1,500 houses by the end of the year. That's for sure. I don't think they're going to be able to offload that many in one go, because it's just going to create too much competition for the same stock. You know, if they offload 50 houses in Durham in one auction, it's just going to suppress the values and also suppress the values in Durham in general.
Interesting you say this, but I disagree. I disagree because in the last auction they sold 11 or 10 houses in Bath.
Yeah, I saw that.
You know, we've got 11 houses in Bath across 2 roads. So you say they're not going to sell en masse. They're not going to drag those values down. Yeah. But they sold 11 houses in the same town across 2 streets. I don't think there's strategy. Yeah. I think
as long as there's a discount, there will be a buyer for all of this. Yeah. Even if there's like a few buyers, because at the end of the day, they'll just wait and time it to their schedule.
Because we've heard the things, and obviously this is all talk at this stage, of them spinning it into a private company. We've had stuff like that. We've heard rumours of them basically selling it off to another private buyer, housing association, whatever you want to call it. And then we've also had rumours of them just trying to get rid of all the stock. It's all rumours at this stage, not exactly what's going on. But obviously they have done a good enough job of selling what they could so far, and they've raised what they could. And from their perspective, they're seen as getting fair market value for the situation of those properties with the description that they describe them, et cetera, et cetera. I've got another question, and it's a question that I get asked quite a few times as well from a trading point of view. Because obviously we've got a lot of people listening here that do buy. So arbitrage works both ways. You can buy open market for something that should have been an auction and stick it into auction and make money, or you can buy auction and put it into open market where it should have been in the first place. So you're saying you did some arbitrage where you went auction to open market. How do you get around if someone's using a lender's 6-month rules? I know there's certain lenders that will do it within 6 months, and then also that big uplift in value, because lenders don't really like that usually, especially when there's a huge uplift in value.
When you mean holding on the
so if someone's buying it from you with a mortgage, their solicitors and the lender's solicitors normally ask, you know, it's been bought for X a couple of weeks ago, now it's been sold after a month or 2 for this price. Why is there such a big difference in value, etc.?
Yeah, we had that certainly with the first Scarborough property. Yeah. But we managed to kind of argue back and say, hey, the comparables are here. You know, this person just really bought a unique set of circumstances. The comparables are here. Like, don't lose sight of what these things are actually selling for. Yeah. You know, because these things are sold for 500,000 done up. You know, he's bought it for 207, but you can't tell me it's worth 207. You know, it's worth what this guy's willing to pay. And thankfully, the guy that bought it bridged it off us, which I think offered less resistance in terms of the purchase price.
Because the mortgage companies are the ones that don't like it, because the problem that you have when people are being seen as buying something undervalued, let's just call it for argument's sake, it's in their eyes it's undervalued. In our eyes, it's you're buying it at market value in those special circumstances, the time frame, the unknowns, etc. That is what that's what it's worth, because it went through an auction process. So I think you could always say, from an auction point of view, it's harder when you're buying it off market, but you can say, well, that's fair market value because it went in auction, everyone was allowed to bid, and that's what it went for. But I think when it's a mortgage lender, they don't like it, because if someone tries to unwind that transaction, they're at risk then. Yeah. And I think there is an indemnity policy against it. I think Lloyd's of London do it. It's a bespoke policy they'll do, and some lenders will want it, some won't. But if you're getting bridging buyers, then that probably takes that risk out, I'm assuming.
Yeah, and I think the other one, for the flats that we've got in London, you know, one of them was 50% loan to value, less resistance. We did get one of the flats down valued, but only a small amount. But again, you know, you go to Woolwich and you type in 1-bedroom flat, you can't buy one for less than 300,000.
No.
So, you know, me saying, okay, you bought it at 240. Well, I bought it at 240 because it didn't have discharge planning.
Yeah.
There's a reason that I got it cheap. I bought
It's the
it directly.
circumstances at that point.
Yeah, circumstances. We're still in the transaction process for the other one, so maybe that might get downvalued. Maybe that might have a bit of resistance. But yeah, entirely, and it is a bit unfair. I think that I wish that it was a little bit easier to be able to move things on and extract your profit.
Well, that's why a lot of traders use auction as an exit, because obviously people can't ask the questions. Once they've exchanged contracts, it's most of the special conditions say you can't wait for the title to be registered, you can't raise any inquiries, you've seen to view the property, etc., and it's just very much a case of serve notice on the day of completion if they don't complete or they do complete. But ultimately, you're not going to get your full market value at auction that you're going to get open market.
But the other side is a lot of the Home REIT stuff that we've flipped had no internal pictures.
Yeah.
It had no information, and sometimes it had a tenant. So you are able to kind of navigate a little bit around it, not entirely, but you can say, you know, there are no internal pictures. You don't know what it was like before. You don't know to what extent we've had to put in. Yeah. And also, everybody knows a house with a tenant in is worth a little bit less than one without, you know, just simply because of first-time buyers.
Yeah.
So...
Brilliant. Okay. Well,
been a fascinating episode today. Really fascinating episode. And this all came about because you messaged Piotr about one of the Home REIT videos we did, and we'll put a link into the description as well for that. We'll put a link in for people to watch that video. And
we'll bring Jamie for a few review videos for the auction lots that are coming up, because that's it's always the learnings, I mean, from the past are always good to apply for the future lots, because everyone wants to know how to get the best deals in the auctions and how to, especially how to uncover the ones that no one wants to buy, or there's very little competition for them because of the problems. So,
Jamie, we've not talked about this, so I'm putting you on the spot here, to be honest with you, in front of everyone. But we're running a auction trading and auction retreat, basically, in Portugal in October 2024. So it's going to be a couple of days. We're going to go out, do more strategizing about property trading, auctions, etc. Would you be interested in coming out and maybe doing more, you know, talking more about this stuff behind closed doors as well with people?
No, sounds good. I look forward to it.
Brilliant. Okay. We'll put a link into the description for that as well. So if you guys are interested in that, if you guys want to sign up to that, we are going to take a very limited amount of people to that. So please register your interest and let us know about that. But yeah, look forward to speaking about that further. And thank you so much, Jamie, for sharing that. That was so fascinating.
Nice one. Amazing.